Got no time to always keep an eye on the stock market? You can stop worrying about the stocks that you have and those that you don't after setting up your conditional order. Set, forget, don't fret. Now available on AB Capital Advantage. Here's how. Log in to your AB Capital Advantage account. On the Quick Trade tab, select either buy or sell and choose Stop Limit as type of order. Select a stock and indicate the number of shares. Set the limit price. It's the highest price at which you are willing to buy or the lowest price at which you are willing to sell stocks. Set the trigger price. Once the price of the stock reaches your trigger price, the platform will automatically start buying or selling the stock. Please take note. For buy orders, the trigger price should be greater than the current stock price. For sell orders, the trigger price should be less than the current stock price. Lastly, choose the term of your conditional order. It can be good for a day, a week, or a month. But please keep in mind that triggered conditional orders are only valid on the day they are triggered. That easy! With the AB Capital Advantage conditional order feature, you don't have to miss stock market opportunities and you can manage investment risk even when you are away. Find out how you can have access to our AB Capital Advantage platform by visiting our website.
Good afternoon, everybody.
Oh, are we good to go?
Yeah, we're good to go.
Okay. Good afternoon, everybody. Welcome to the Friday edition of AB Capital Securities Earnings Call. My name is Jeff Tang, and I am only one of the two hosts for this afternoon's call. With that, please allow me to introduce someone who doesn't really need any introduction in this program. Is my co-host, Mr. Ian Garcia. Hello, Ian.
Hi, Jeb.
Good to finally share the mic with you in these events.
Yeah, I'm sure our audience have seen us hosting individually, but this is the first time they're seeing us together. Would have been better if we
Yeah,
were sharing the
absolutely.
camera, but due to the current situation, still better this way.
Yeah, I mean, I don't think you'd want to be anywhere near me. But put that aside, everything is fine. Hope everybody's feeling well today, especially given the situation outside. But Ian, going back to the topic at hand and the most important uh, event for today or at this hour is this featured company of ours. Today, we're going to be speaking to them, and this will be the fourth time that we will be hosting their earnings call. In fact, we are very privileged that we can host their second quarter earnings call. And the fourth appearance in our earnings call is the most by any company in our show.
Yes, definitely a record. And I guess most people would be wondering why we feature FINMA so much. But it's really one of the most underappreciated companies that's currently listed. And you know how we are in AB Capital, we like to put the highlight on companies that we think deserve the attention. And we believe that FINMA is one of those.
I just want to highlight what you said, underappreciated. It is not only underappreciated, undervalued as well. Now,
Right.
before we get to it, allow me to keep everybody up to speed, especially for those of our viewers and our audience who would be hearing from FINMA Corporation for the very first time. So, who is FINMA Corporation? Well, FINMA is actually one of the oldest listed stock in the PSE. In fact, they were listed as early as 1958, but they were still under a different name. It was under Baknotan Consolidated Industries Inc. And it was only in 2006 when FINMA Corporation or Baknotan, during that time, changed its name to who it is today, which is FINMA Corporation. FINMA Corporation goes by the ticker symbol PHN. And the stock currently has a market capitalization of 5.2 billion, based on their recently on their closing price this afternoon of 19.26. Now, um, we are very excited to speak to the executives of FINMA Corporation. But before we get to it, as we always do here in earnings call, we would want everybody to make the most out of their time here, especially on this Friday afternoon. So before that, let me try to set the table and get everybody ready so that we can make the most out of the information that FINMA will be sharing. I just have a few slides. Ian, please bear with me on these few slides, though, because we're here to talk to FINMA. But I'm not quite sure if everybody realized, but since the pandemic, FINMA Corporation has actually outperformed the Philippine Stock Exchange Index. The number you ask, FINMA Corporation, since they bottomed in March 9, well, actually since March 9, 2020, FINMA has risen by 157%. Compare this to the Philippine Stock Exchange, which since they made their COVID pandemic bottom in March 16, 2020, has only risen by a little over 30%. This little company, this under the radar company, has actually outperformed, especially since the fourth quarter of 2021. Maybe you're asking why. Maybe you're wondering what led to that sharp rise, as you can see on that graph over there. I hope we can learn more about it later, especially for those who are going to hear from Pinma for the very first time. Next slide, please. Okay, What you see here are just a bit of different colored noodles, but let me try to explain them to you. The white line is the share price of PHINMA Corporation. As I've said, it closed at 19.26 today. The orange line is their earnings. Sorry, that would be their revenue, the sales of PHINMA Corporation. And the blue line is your earnings per share. Well, we here in AB Capital Securities, as Ian mentioned earlier, this is the fourth time that we will be speaking to PHINMA Corporation. And why do we love to bring them back? It's mainly because we here believe that it's earnings precede price movement, and we really believe that. And kindly show the next slide, please. To illustrate this clearly, you can see that after the sharp rise in the share price, since during the time of 2021, you would notice that the stock price has actually consolidated. It reached a peak of 21.05, but as I've said, it's now at 19.26. But you can see how the white line sort of like precedes how the blue line sort of like declined. And that is actually the earnings of FINMA Corporation. Now, my dear ladies and gentlemen, since you have decided to spend an hour of your time this afternoon with us, what I would like us to understand is what will lead this white line to go up hopefully and not continue downwards. What we would like to find out is if the blue line will stop at 54 cents, and from 54 cents, hopefully it can go back up to 1 to about 150 per share. Finally, what I would like you to remember as we speak to the executives of FINMA Corporation is this very last slide. Remember, FINMA Corporation changed its name to FINMA only in 2006. During the time, they also had significant changes in how they conduct their business, in the business strategy, and none more so than the change that they have done since the pandemic. As you can see in that sharp rise during the period of 2020 up to the current. The white line, you may wonder what that is all about. That is the more popular PE valuation metric. You will notice that since 2005, since the change in name, give or take, the bottom of this valuation has always been at 4.5 times, as you can see. So whenever that white line is at about 4.5 times, you should actually be putting FINMA on your radar because something deserves your attention. Now, as I've said earlier, it is earnings that moves stock price. The question for everybody, especially for FINMA's executives, is that will that EPS move up to the point that that valuation is something to take advantage of? So, these are the questions that I have. I don't know, Ian, if you have your own questions for FINMA, but I don't want to take the time this afternoon. And yeah, let's please introduce our guest speakers for this afternoon.
Okay, so thank you very much for your presentation, Jep. We will now accept questions from the audience.
Yes.
Just kidding. Of course, we are here to introduce our guest speakers. And it is my pleasure to introduce to you our guest speakers for today, Mr. Pythagoras L. Brion Jr., Executive Vice President and CFO of FINMA Corporation, Mr. EJ Kwa Hyun Sen, Vice President for Corporate Strat and Planning, and Ms. Bianca Del Rosario, Corporate Planning Officer. Hello, Sir Pete. Are you there? Sir
Hi,
Pete,
good
nice to
afternoon.
see you again.
Yeah, EJ.
And
Hi, Ian. Hi, Jeff. Good to see both of you.
Hey, EJ.
so, without further ado, I will turn
How
over
are
the
you?
floor to our speakers.
Good. Sure. I think we have an initial presentation to share. Mr. Brion will
Yes.
just go over some of our key highlights.
Okay, allow me to give you the financial highlights for the first half. FINMA Corporation, again, to remind everyone, has four business units, and this will be presented by the three of us, myself, EJ, who heads strategy, and Bianca, who assists EJ in the strategy work. No? So going to the financials in the next slide. Revenues again went up the first half, total of 8.6 billion, about 10% higher than the first half of 2021. This is a growth in revenues for the past 3 years on a continuing basis. In the next slide, you see the breakdown among the key business units, which is construction materials and education. Construction materials is the larger business in terms of revenues, um, putting in about 80% of total, and that has grown to 7 billion, about 12% higher year on year. No? Education registered at 1.4 billion, slightly lower than last year at 1.5 billion. However, this is not representative of the education revenues in the first half. Um, in fact, the enrollment, which drives the revenues in education, went up in the first half of 2022 to 94,000 students. That is up from 74,000 students 1 year ago. The big difference is really the number of months during which classes were held and therefore revenues were recognized. In 2021, because of the change in schedule of classes of school due to the COVID lockdowns, classes were held from January to May, or 5 months of revenues. But in 2022, classes were held only between January and part of April. That therefore reduces the revenues to about 3.5 months. That's a major difference in terms of revenues. Shall we go to the next slide? On consolidated income this year in the first half is 639 million as against 784 million last year. And again, this is because of increases in cost, particularly in our construction materials business, but the cost increase has been true in all segments. But despite that, I'd like to emphasize the way income has held up fairly well. You don't see any major adjustments in income due to these cost increases. We've handled the cost increases very well. In the next slide, we will see the breakdown of the SBU contributions. Total net income of 639 million came largely from the construction materials business, 443 million, slightly lower than last year, again because of increases in materials, particularly also in energy as well as in FX. Education contributed 97 million. You might be surprised how much lower it might be compared on a year-on-year basis. But again, there is that reduction in class months or revenue months this year compared to last year. On top of that, we have granted a significant amount of incentive pay, which we call variable compensation, to our people in education business. Our people are the most important parts of our business anywhere in the group, and we want them to be duly motivated and recognized for their contribution to the progress of the business. We want to take good care of them. On top of the contribution from education and the construction materials business, we also recognize 99 million pesos in other income. This is largely in recognition of the increase in value of our investment in Songlam. If you remember, we put in $50 million of investment in Songlam Cement, the largest private cement company in Vietnam, and they've registered profits. Perhaps EJ can explain this a little further later, as he just came from Vietnam about 2 weeks ago. On the balance sheet, we remain modest in our increases. We've managed our liquidity very well, improving our current ratio slightly and slightly reducing our leverage. We have a notable increase of 400 million in our property, plant, and equipment that represents continuing construction in the schools. We have construction in University of Pangasinan. I was there last week. They're now in the third level of the new building. They continue to construct the dentistry building in Southwestern University in Cebu. And they also have continuing construction here in Manila for FINMA College NCR based in Cubao, no? In Quezon City. Um, that kind of expansion has been matched by partly increase in liabilities, but also from equity. I think what's important to note in our balance sheet is that we have kept our cash at 5.2 billion pesos. 2.6 billion of that is investable cash at the holding company level at FINMA Corp. FINMA Education Holdings, which covers all the schools, still has about 1 billion in investable income for school expansion or acquisition. These funds have been reserved for a number of expansion projects that we have prepared for each of the SBUs. Just last Wednesday, in the next slide, FINMA Core Board approved the investment of 420 million into FINMA Property Holdings Corporation. What this money will allow PPHC to achieve to expand its scope of development from medium-rise buildings to horizontal developments in key cities, and now to a township project in the Visayas region. What the township project will do is provide a longer runway for development and therefore more sustained revenues and profits for FINMA properties. When this amount is fully invested in the next 2 years, FINMA properties will become consolidated with FINMA Corporation. This is just one of a number of expansion projects in the pipeline, not only in schools and in the construction materials business, but as well in the property space. I hope that gives you a bird's eye view of how we have performed in the first half. Thank you.
Yeah.
If you have any questions,
Thank-
go ahead and ask. Please, we'll be ready to answer the questions, Jeff or Leo.
Thank you very much, Sir Pete.
Actually,
So we've seen the figures, we've seen the numbers and the earnings for FINMA, the overview at least. A lot of us are curious. We've seen the figures, but we would like to see the schools. Like for the education part, can you show us maybe a little overview of what your how the unit performed and um, maybe some photos of your schools?
I think
Sure.
EJ prepared something on that.
Yeah, be very happy to tell you about the education business. It's actually a business that we're very passionate about, very much in line with our mission orientation. Let us just show you a couple of slides on what makes FINMA education so unique. But the main thing that I'd like to drive in terms of what makes FINMA education unique is that by both intent and design, we're focused on providing quality, accessible education to the underserved youth of this country, those who are most are in need of good education. So, in order to accomplish this, we have a few slides here that show some before and after pictures of the schools. But in order to accomplish this, we're really focusing on keeping our price points low, focusing on the improving the employability of our students, and we're starting to see very strong results in this. As you can see, most of our students are targeted in the C or lower C, D and E markets. We focus on accessibility, employability, and make sure that they have a short payback on in terms of their tuition. So our tuition rates, with the exception of Southwestern University Cebu, are no more than 30,000 pesos per year. Yet we have high quality. Our board passing rates are good. Our employability, while it's 71%, has been going up recently. And we're starting to have very strong board passing rates and board top notchers. In fact, in the recent nursing exam, 6 of the top notchers were from FINMA education schools, 5 of which were in one school alone, the University of Pangasinan. Um, but in addition to that, we're focused on employing economies of scale so that we can keep those margins to the level that we want to, and take advantage of the network approach. We have a very relentless focus on education. So again, we're just focusing on providing quality education. So we've taken out some of those extraneous activities such as basketball and beauty pageants. And to the extent that we can, we have a very centralized operation where things like setting curriculum, marketing strategy are handled at the head office level. Maybe we can go on to the next couple of slides. I think one of the things here in terms of mission orientation, people have asked us, how did PHINMA education continue to grow despite the pandemic, especially at the beginning when other schools were having difficulty resuming or starting classes again? It's really the heart of PHINMA education. You know, they went out and they called every student, they spoke to each of them, they spoke to many of the parents, getting a feel for how the students were, what their well-being was like, and if they were ready to resume classes. Then our academics team quickly shifted their curriculum, paying attention to the needs of our students. So again, if you look at the demographic of our students, their access to mobile devices might be a little bit more difficult. For example, some of them would have to wait for their parents to get home from work if they were to use a mobile device so they could borrow that. We were able to provide or help them find financing to get mobile devices. We provided prepaid load from Globe and Smart on a monthly basis, but also to address the limited access to data, we also printed up a lot of our curriculum. And I think the benefit here, not just in terms of retaining the enrollment that we had, but these students and their parents really appreciated that personal touch, and they've become some of our biggest ambassadors in terms of encouraging their friends, encouraging their family members to also attend the PHINMA education schools. Next up, what we have done over our history is really focus on acquiring schools in developing urban areas. And as you saw in the slides earlier, and we'll show again, we really focus on improving the schools. We devote a lot of capex to making them look better, modernizing them so that they can handle the growth that we're forecasting. You see here on the left-hand side, Aurelio University in Nueva Ecija when we acquired it. And then after we acquired it, it looks a lot more modern. And this gives our students, our alumni, a lot more sense of pride. If we can look at the next couple of slides, we'll show you a couple more schools. This is the University of Iloilo. Again, on the left-hand side was the before, and on the right-hand side, we see after. And then I think
Looks
we have
like my
one more
alma mater
example.
already. Alma mater is intact, and of course, my chairman would have something to say about that. But looks like this looks like that green building already along Taft Avenue. EJ, sorry to cut you off, but
Yeah, sure.
you know, I just remembered I had a meeting recently. I visited the foundation. It was somewhere in Banawe. It's a school actually, and of course I had an hour presentation, and then the sister, the nun was already telling me that they have a school at the back of their compound, somewhere there in Banawe. I'm just not gonna mention the name, but they said they have about 2,000 students, and you know. Maybe because of our conversation, I immediately blurted out, would you be open to partnering with other schools? So I asked them that question. And she goes, yeah, definitely, we're open to that. Okay, because I know of a company who might be able to improve things around here. They have a very good system. And the nun asked me, sino ba yan? I said, it's actually FINMA education. And the nun, well, to my surprise, maybe because I've been a graduate for too long, she said, FINMA, okay, kilala namin yan. And alam mo, in fact, we would like to meet their boss. Matapang yun, sabi niya ganyan. And I think she was referring to Mr. Ramon Del Rosario. Where am I going with this? Well, number one is, of course, what I would like to know also, on top of that is if we can really help this institution moving forward, and also your plans in terms of growing the educational system or education system or units to that effect. Are you going to build your own schools, acquire new schools? And I guess more importantly, more on the social aspect of it. What happened to the owners of those schools from which you bought those schools? Did they really divest because they didn't want to run the education business anymore? Or are they still part? And actually harnessing from the expertise of FINMA?
Mhm.
Sorry, medyo mahabang questions, but uh, the first one first.
There were quite a few questions. I'll try to pick them up, and maybe Mr. Brion might want to join in as well. FinMe
Mm,
Education is on the lookout into expanding our network further. Over the past
mhm,
few years, we've expanded into two schools here in Metro Manila as well as two in Laguna. This is using some funds that were invested into FinMe Education from private equity investors in 2020. These include the Asian Development Bank, FMO, which is the Dutch Development Bank, as well as Kaizenvest. These are investors who share our mission. And the more students that we can reach and provide our quality of education to, I think the more that they can uplift the standard of living of their families. And that's something that's very important to us. Making sure they can get jobs is really what makes their lives better at the end of the day. So we're always on the lookout for acquisitions. As I mentioned, we like developing urban centers. These are areas where there's going to be a need for employment. And I think one of the things that we can bring to the table as a network is that FinMe Education is uniquely positioned, also being part of a more diversified conglomerate. They're able to link the needs of industry, to link the requirements of employers with what they're doing on the academic side, so that to the extent that they can, our students will become employable. Another good example of that recently was that the University of Pangasinan and SM Supermalls in Pangasinan reached an agreement where UPang will provide job recruitment and job placement assistance in the SM malls of Pangasinan. So it's really, they do such a great job of connecting our students with the future employers, giving them those opportunities, building up their confidence, teaching them the skills that they need to succeed. And that's really, again, addressing the social aspect. While at the same time, you could see that the profitability is there so that we can keep investing in our schools, keep investing in our network so that we can further our reach. Sorry, there might have been a few
okay.
other questions that I missed on that one.
Yeah. But
Yeah, but
let me pick one question that I remember, Jeff. No, you were asking about the former shareholders of the schools that we have taken over. Most of these schools, if you look at them, in fact, all of them now are controlled by the second generation or old or the third generation of the founders. The founders had vision. The second generation capitalized on the cash flow of the schools. By the time it gets to the third generation, they have no interest in running the school. It's just getting the money. So, in almost all cases, shareholders have sold out their shares. And they must be regretting these days to see how beautiful their schools are and how large the enrollment is. There is one little exception. Southwestern University, there is one member of the family. There were seven, if I remember right, seven members of the family in the second generation that decided to stay on. I am sure he's very happy because when we took over the university, the enrollment was just about 5,000 and it was not going anywhere. Today, um, Southwestern University is probably an enrollment of about 15,000, three times as many as when we acquired it. And it has grown to be a very large university, very very good reputation. We had both top-notchers in dentistry as well as in medicine, which didn't happen before. So, in short, shareholders should not have sold, but we're happy that they sold because we've been able to bring the schools to serve a better mission to more people
mhm,
who need it.
yeah. Thanks for that, Pete. Actually, the going back to the Southwestern experience, so the number of enrollees tripled, mainly because after they have seen after the early graduates, the early enrollees experience the high placement rate or the success rate, if you will, and that's when the word of mouth started to spread. Or was it more like it was really the system, how you change everything, and then it just got recognized by a lot of other parents? Which one really was it that increase or that drew attention to that school?
I think it's a combination of the two factors, Jep. One, in terms
Mm-hmm.
of the quality of our graduates, we have another slide that shows that board passing rates have come up quite significantly since
Mm-hmm.
from before we entered the school until after we entered the school. So you can see here across six of our most mature schools, the highest average first-time passing rate was 60%. That was Yupang, which was already on the high side. Now, generally across the network, we've seen improvements across all schools, from 17% to now 64%, up in the case of AU. So the quality is there. They're starting to reap those benefits. And then again, leading into employment rates, of course, we're starting to get more board top notchers. But at the same time, one of the things that we've done recently is we've rebranded all of the schools. So their school name now also includes PHINMA. So again, you're starting to see that network effect. You're starting to see students being proud of being PHINMA students. So you can see that, okay, I'm a PHINMA student in AU. Oh, you're a PHINMA student in UPANG. We're getting those network benefits. And we think that's really one of the beautiful things about PHINMA education. And we've seen strong enrollment growth recently. 74,000 students 2 school years ago. Last school year, it was 94,000. And this year, we're already ahead of our target enrollment, even with a couple of weeks left until the close of enrollment. So it's really something that we're proud of. It's such a great business.
Yeah. Just to lighten up the conversation a little bit, there's another idea that I thought of. Of course, green and blue resonates with the schools that me and my chairman represent, and I wish he listened because I would like to show to him that green is actually much higher than blue. Um, just a private joke between us. At any rate, yeah, thank you very much for those information, Pit and EJ. Before we get to the question from our live audience, I would just like to acknowledge some of our audiences who are not who are elsewhere outside Metro Manila. So we have Arlene Sotelo. She's listening. She's watching from Cebu City. Of course, Lenlo72. Thank you for joining this call. She's watching from Taguig, and of course, Nikki Garcia from Pasig. Of course, but who I'd like to
Not just
greet
the
is
Philippines,
AG.
Jeff. I
Huh?
can see someone from Japan watching.
Exactly,
Wow.
exactly. We have this client base who we regularly talk to. We have some Japanese clients who we regularly update, and we've been inviting them to our calls so that they can directly listen from company executives. So thank you very much, AG, for logging in. Ian, we have a live question from Simon Rique.
All right. Sige, I'll read this question. For CMG or Construction Materials Group, I guess, what is the year-to-date increase in your direct input costs? And how are you managing this? Earnings call Mindanao. She's from Mindanao.
Okay,
Now,
all right. That's a great question. Um, as you know, construction materials are really cost sensitive. It uses a lot of energy. A good part of it is imported, therefore exposed to effects. And materials, of course, are bound in the commodity markets. No? With the Ukraine war, commodity prices have gone up. In overall, in the first half, costs increased by about 18% in construction materials. We were able to increase prices 10%. So that means our margins still went down a bit. But it could have gone worse if we have not been, if we have not put our 60 years experience in this business to bear on the business. We have streamlined the operations, which we have continued to do from day one when we restarted the Mariveles plant in 2019. Loading, for example, which used to take about 7 days, unloading from the ship that brings in the materials has come down from 7 days to less than 5 days. Turnaround time for trucks, for example, is best in class. We are able to turn around trucks in about 5 hours or less. and that compares, for example, with maybe 3 or 4 days with other local plants. Um, in terms of our fixed and semi-variable, we have trimmed down the way we operate. In the distribution cost, for example, we have adopted a streamlined hub and spoke type of distribution. These are the things that we do, learning from our past experience to make our operation more efficient and therefore more cost efficient. No? And that has benefited the customers as well because prices could have gone up even higher, no, if we had not managed our costs. No? I hope I had answered the question from Mindanao.
Yes, I think that's very comprehensive. Staying with the CMG SBU. Hello po. This question is from Kelsey Sapitan. Hello po. For CMG, what was the increase in your volume sales year on year? Were there any price increases implemented that contributed to sales growth or contributing to sales growth?
Okay, let me try the first part. On the steel side, because housing has not really taken off this year, it's flat. Okay. Volume is about just a little less than last year, but roughly about the same. No? When you talk of cement, that has increased quite a bit. The increase is, I believe, about 10%, no, year on year. Um, were there any price increases implemented? Yes, we have two. Even our competitors are subject to the same price pressures, to the same cost pressures that we are subject to, and the industry has, in fact, brought up prices. No? Even our suppliers have brought up their prices. Our distribution costs have gone up, so we have to pass on. Price increase on average is about 10%, much less than the increase in costs.
Hmm. Thanks, P. Uh, okay. Uh, you, Mr. Brion. Thank you, Finn. Thank you, ABCAP. I am not sure if this is millennial speak. The you, Mr. Brion. Anyway, uh, another question from Simon Rique for CMG. What is? I think this was asked. This has been
Yeah, that
addressed
was the one
already.
before. Yeah.
This was the first one. Yep. Okay. From Jaime Zalamea, what are your plans for growth in the property segment?
Property has become very exciting, Jeff. Well, I guess, can you show? Yeah, okay. PHINMA Property has been a small developer for many years, for the past 30 years now. It has gone from building expensive townhomes like the Manila Polo Club townhouses to mass housing that we did in Laguna. And then we started the medium-rise building craze in the National Capital Region. From there, we have gone back to building homes with an intention to build it for the middle income group, particularly for the middle income group. There is a very large housing backlog. In my younger days, they used to say there's about 2 million. Today, there's about 6 million. And a good part of that, about 40%, is the middle income group who can buy those houses. And supply is never enough. And that's why the backlog continues to increase. So what PPHC has done in the past 3 years is to move out of Manila and go into key cities in the urban areas, key urban areas in the provinces. So we went into Cebu, we went into Davao, and this last year we went to the suburbs of Lipa in San Jose. We're opening another one in Tugbok, which is in the suburbs of Davao. But going beyond this kind of projects, we have started to go into what you call a township. And that is the reason why PHINMA Corp decided to invest 420 million in PHINMA Properties, so that PHINMA Properties can get involved in this township project. We are now looking at the township concept, the layout that has been prepared by the Buji plus Royal Design House. It's a very pretty type of development. It's a classy development, but meant for the middle income group of that particular city in Western Visayas. Um, and this is what the advantage of doing a township is that you get a big property, 21 hectares in this case, which gives us at least 10 years of development runway. That assures in the property runway for sustaining its revenues and its profitability. And in the group, we have a few other properties that we can contribute to this particular division. This is how we see PHINMA property to grow. By having this kind of developments, the runway for growth will be far more established than what they have done in the last 3 years. So, Jeff, I guess in short, that's how we will grow PPHC.
I see.
Mhm.
So, Sir Pete, sorry, can you maybe give more color to why the rationale behind the shift from medium rise in urban centers to townships in outside of the city?
Well, medium rice has been concentrated in the National Capital Region. But as you know, the National Capital Region is really congested and land prices are very high. Doing 5 to 7 floor buildings, condominiums, will no longer be profitable. On the other hand, there has been a dispersal of population and a growth in the economies of key cities like Cebu, Davao, and even places like Lipa and San Fernando in Pampanga and Iloilo and Bacolod. No? So we have followed that trend, and we see that the middle income offering that we have done in Manila is something that attracts the same emerging middle income group in those places. Case in point, in Cebu, we have a dormitory building, 2 towers. The first tower was sold out already last year. In Davao, we have, if I remember right, there are 11 buildings in the Davao MRP that has completely sold out as of April this year. And so we have to open another project, but maybe more horizontally oriented to fit the kind of requirements that people have in the BAO. No?
Yeah, if I can add in a little bit also, this is very closely aligned to a strategic vision of the group. If you look at how we've positioned ourselves, we really see the Philippines as a young, growing population. It's really part of our responsibility. That's why we're in education to help uplift more and more people upwards. So we're helping with that growing middle class. And if you look at how we've structured our education business, we've been developing it in developing growing urban centers. Now you're starting to see that in our property business, it's starting to follow where we're also identifying those growing, developing urban centers. And of course, this growing middle class, this growing population will need a lot of construction materials as they build shelter. They'll also want to start traveling more. They want safe stays, and that's why we have our hospitality business. So this demographic dividend is really one of those key trends that the PHINMA Group is intending to capitalize on over the next few years, and we've really positioned for that.
We can see that synergy that you're trying to go for. Um, do you have like your property developments? Are they close to your schools?
Not
Sorry, Sir, go ahead.
specifically, Ian. But we do have developments in the Southwestern University campus area. We built a low-cost housing to help the staff of Southwestern University get reasonable and decent housing. We are now building 2 towers for the dormitory. We're now in the second building. and we have a third and fourth project in the pipeline. But otherwise, in other areas, we don't really locate near the schools. However, when we go to the townships, then you will see the synergy there that will include the schools, the hospitality business, as much as the development will use a lot of construction materials.
I see. Thank you for that.
Yep.
Anything on your
Um,
end, Jeff?
yeah, yeah. Okay. Actually, I have a question sent directly to me, but I'll piggyback on that question. Seems like an analyst question, but maybe can I ask for maybe EJ or Bianca to bring back the revenue graph that you showed earlier before I throw in the question from the analyst, specifically the decline in net income for the first half of 2022. And the question is more in line with the project and the growth trajectory that you're looking to that you're seeing in your property segment. So the first question is, as far as I can remember, in terms of net income, the construction business accounted for about 80%, if I'm not mistaken, of the first half 2022 net income, while the education business accounted for 20% or a little bit less.
Yeah, well, in terms of number, construction materials is 443 million, and the education business is 97 million.
Okay. So we just can't see it yet, no. But that's a significant decline from the previous year, and we in line with the question of will what kind of normalized earnings can we see from FinMa Corp moving forward, and at the same time, given this, I just read in your disclosure yesterday that you infused 420 million. I think see Mr. Bion mentioned it kanina. What would be the earnings share from these three business units moving forward?
Moving forward, construction materials will always be fairly large. So you're talking of 45 to 50% of total. Education in a normal calendar should be 40, maybe 45%. And property is still small because it is just really an associate company, maybe 5% with all the other income. No? So go if you're looking at how revenues will develop during the year, um, maybe we should talk of targets based on our view of conditions. No? Um, in the case of construction materials, there you now see the income, the 443 million. In terms of construction materials, we will be able to sustain the volume. That's a target. And it's a question of the margins. If you look at the margins, there's a very good chance of maintaining our margins the first half with a possible upside. And I say that because you see oil prices coming down from $122 per barrel in the first half. It's now below $100, about 95, 96. In terms of steel prices, that went to as high as $1,200 per ton. It is now about $850 per ton. Quite a big difference. In terms of even foreign exchange, when we up 56 to 1, we're now 55, 30, 55, 50 range, slightly lower. So when those input prices continue to have that pattern in the second half, we are certain that we will hit our margin targets. In the education space, as I said, the first half is not representative of the education business. We had 94,000 students in the first half of 2022 versus 74,000 students in the Philippines in 2021. But because there were 5 months of school in 2021 versus just about 3 months in 2022, there's a big difference in revenue, but also even a bigger difference in income. So if you look at the second half, as EJ can talk more about the enrollment, uh, we will not surprise you. The strength is sustained, uh, and therefore, in the second half, we see that there are at least 5 months of revenue of classes being held. So you should be able to see a more normal income, more comparable to last year in the second half.
Mm, okay.
Property made big strides the first half, made a modest income. They should make continue to make their modest income the year.
Mm.
Okay, so I guess we don't have to prompt our audience to send in their questions because live questions are coming in. Uh, Jeff, should I do the honors of reading this or?
Yeah, yeah. Please go ahead. Please go ahead.
All right, so we have a question here from Kelsey Sapitan. How is the occupancy for your hotels and where are you seeing stronger performance in your MOA hotels or outside Metro Manila?
I can answer that. Okay, so the hotels are actually seeing a resurgence of the corporate and leisure market segments already. So that's been helping offset the impact of lower quarantine bookings for us. And while our occupancy rates haven't really recovered fully yet, this shift in market has already helped our top line in the sense that it's actually allowing us to increase our average room rates. And these room rates have actually already gone up by around 30%. And on the question on which hotels are doing better, I think it's the Metro Manila hotels that are doing better, and that is because the recovery that we're seeing is more on the MICE activities, which are the meetings, incentives, conferences, and exhibitions. So given our reputation as an international hotel chain and given that we have a wide reach around the country, this puts us in a good position to capture those types of activities. And looking at our MOA hotels in particular, they actually are positioned very well to capture events like those, for example, in SMX Convention Center or corporate events of like the many e-com offices in MOA area.
Mm.
Thanks,
Okay.
Bianca.
Okay, switching gears again, going back to the construction materials group for Phil Cement. This is from Katrina Santos Alcasabas. How did imports perform versus local manufacturers in first half? How about in second half so far? Trying to get some indications. What is their market share of total imports now, and what is the market share of imports to total demand? So it's a four-pronged question.
Okay, and that's several questions.
Let's try to dissect the question.
Well,
First one, how did
let
you
me
perform
start.
with it?
Let me start by saying that the demand for cement in the Philippines uh, still exceeds what is locally available. Okay,
Mhm.
and therefore, if imports are needed. Otherwise, then you'll have a very high price of cement, and number of projects will probably have to slow down. So, how did we do? I think we have been subjected to the same cost pressures as our peer companies in the Philippines. Our prices are not anywhere lower than theirs. In some cases, in many cases, in fact, our prices are slightly higher than theirs because of our foreign exchange component. Um, how is the second half doing so far? July numbers are because of some rains, it's slightly lower than June, but June is also the highest volume that has been done ever. Um, I think we did about little over 5 million bags in June.
Mm.
So July is just slightly lower than that. What is our share of imports now? I really don't know.
Mm.
I'm sorry, I'm not aware of the share in terms of imports now. But
Mhm.
in terms of local demand, our people think that we're about 7 to 8% of the total supply in the
Mhm.
market.
Yeah. Maybe just to
Okay.
build on that a little bit as well. We noted in the State of the Nation address of President Marcos that he really intends to continue the infrastructure spending. We're starting to see private construction spending really pick up as well. And so that's really
Mhm.
going to lead to a demand for our construction materials group. And that's what we're working to make sure we can address that demand and provide it of high quality at a reliable time for our customers.
Yeah. Actually, so just piggybacking on Ms. Santos Alcazabas's question. So in terms of FX, the the group or CMG is not severely or adversely affected, or do you benefit from what's the position? What's the effect on of FX to CMG?
Because our products are largely imported, Jeff, FX does affect the cost of the products that we sell. No? So every dollar movement will probably result in maybe as much as a peso per bag of cement, no? Including, of course, the impact on freight costs. No? Even freight is paid in dollars. No? So that's how it is. No? But again, it's efficiency in terms of logistics, in terms of distribution, in terms of handling. No? That's how we manage down the cost of cost increases. No?
Mhm.
Yeah. And also when you look at it from a portfolio point of view, FINMA also has an emerging ASEAN portfolio. FINMA Education has been expanding into Indonesia. It's a market that we're very bullish on. We're looking at providing our same level of quality English
Mhm.
education to the Indonesia market. And last year, FINMA Corporation closed a $50 million strategic investment in Songlam in Vietnam.
Mhm.
And this is denominated in dollar terms. So that does partially offset it. Mr. Brian did mention that I was recently in Vietnam looking at the
Mhm. Yeah.
Songlam plant. Since the time that we closed our transaction, their capacity at that point in time was 5 million tons of cement per year. They've been able to increase that capacity to 6.4 million tons of cement per year. So they've increased their operational efficiency. They continue to be the best run plant in Vietnam, although I am biased. And we do like the Vietnamese market. We do think that the Vietnam consumption story is intact. And in fact, there's a large opportunity for growth in the Vietnam market. So we do have some
Mhm.
investments also in growing in the ASEAN region.
Mhm. Mhm. Okay, we are almost out of time, but we just have one more question from our audience from Ronga 2001. How much are you spending on capex, and how will you finance this?
Uh, when you're talking of this year or next year,
As a group, I guess for for what business unit, but I guess siguro in broad terms na lang din siguro Pete, in terms of capex budget siguro how much capex for this year have you spent?
The
How much
member of the audience clarified
this
for next
next
year
year,
daw.
next year?
for next year.
Yeah.
Next year, we don't have the numbers yet. We have ideas, we have plans for expansion in many parts of the business, but we don't have a total number yet. No. We
Mhm.
think that we should prepare, just an indication, we should prepare at least 5 billion in equity to be able to support that. No? And we have about 3.6 in place, just maybe we need a little more. No? But in terms of debt financing, we would, for on a project level, on company level, we'd go upwards of 2:1. So you can just imagine the magnitude of capex that we're considering. We're looking at another version of the Mariveles plant very soon, if that's warranted by the infra program of the government. In the schools, our head Chito is still looking for schools to acquire, but even in the existing schools is pushing the boundaries. We have upwards of, I believe, something like 3 billion worth of expansion in class capacity in existing
Mm.
schools. To match the expected increases in enrollment in property space, quite an amount that will be laid out over the next 3 years. I mean, that's the kind of planning that needs to be done for property. And this hospitality, we also got an approval from the board of the hotel company to expand the Coral Way Microtel by 90 rooms, no? Bringing the total inventory of rooms in the MOA area to over 400 units. So,
Fantastic.
so there's quite a number of engines that are running. We'll come up with some number later part of the year. All of these are getting inputted into the plans that EJ and Bianca are working on.
Yeah.
Thank you, Sir Pete.
Uh,
So, speaking of expansion and future plans, just a personal question from me. Um, which one of the numerous plans of FINMA for the future are you most excited about?
Uh, I'll tell you, it's really the people business. And maybe EJ can elaborate. You talk of education, you talk of housing, where the benefits are for making lives better for people by all means. But even in construction materials, we're excited, no? Because we can see how this will contribute to the development of infra. No? We're the guys who can supply 40 megapascal and 50 megapascal type of cement. That is not widely available in the Philippines. And this is cement that we need for our heavy duty infrastructure. Talking of airport runways, talking of elongated bridges, you're talking of elevated railroad tracks. That's the kind of
mhm.
product that we need. So,
Okay.
EJ, you might want to talk about schools, our biggest passion.
On my part, I know representatives of our different SBUs are watching, so I won't say which is the favorite project. But I think what my favorite is that all of our SBUs are firing on all cylinders, and we're starting to see more and more synergies between them. Like Mr. Brian mentioned, the education business is continuing to grow. We're starting to serve more and more students. We're looking at more and more schools. That's going aggressively. In construction materials, they're looking not just at how they can improve their operational efficiency and increase their volume. They're also looking at different applications and different product lines for existing products that they have. And they're starting to see even different projects such as insulated panels for cold storage projects that will help reduce the power costs of our clients. Those are different, exciting projects. Property, of course, has the township project, and hospitality. We want to see people traveling again and enjoying themselves. The Philippines is the most beautiful country in the world, and it's been too bad that for the last 2 years people haven't been able to enjoy that. So it's happy to see all of these businesses expanding. It's happy to see the performance across the group and different things like the township project where they can all play a role. Maybe that's probably the most exciting to me.
Mm. Well, with EJ and Bianca, we're already we are pretty much extended when it comes to this earnings call, but I would just like to make sure that I got the numbers correctly. So, Pit, you mentioned the 3.6 billion is what you're planning to spend next year for. Is this for construction materials only?
Um, no, Jeff, I said that in terms of magnitude, we've got
Yep.
3.6 billion in place in terms of equity
Okay.
that can be provided on a project or company level. No? On top of
Okay.
that, we think we need at least 1.5. So maybe total equity is 5 billion. No? And if we therefore structure the capital as 2:1, then
Yep.
you're probably looking at a total of 15 billion as a
That's good.
very loose estimate of what we want to do.
Yeah.
I think the dreams are far bigger than that. But if we're talking of a time frame, maybe that is the more reasonable amount that we can deal with for the moment. No?
No, sorry to pin you down on the numbers, but when you were giving the numbers, the computation in my head already went up beyond your market cap. Your market cap is just at 5.2 billion, and then the numbers that you were blurting out, as you've said, if you go by the 2:1, then you're looking at a 15 billion spend. So, I mean, I don't know what your target IRR is for every business unit, but normally, if you spend that much, you would at least earn a certain level of IRR that should at least be 12%. So, I was just running the numbers quickly in my head, and I thought, if a company is going to spend this much, we just don't know what the timeline is yet, but there's got to be something wrong with that 5 billion market cap. I'm just thinking from that perspective. But yeah, I know that you're sharpening your pencils, bringing out the rulers, and bringing out the sheets of paper to finalize your capex for next year. But we don't want to hold you. We don't want to hold you any longer. But before we close this session, maybe one final message from Mr. Rion, perhaps. Maybe you can give our audience a clear picture of who FINMA Corporation really is, and what we can expect from the company moving forward.
FINMA has always been committed to this country. We want to contribute to building up this country, but more specifically, making lives better for the Filipino people. And found we have found that mission being fulfilled in the education business, in the housing business, even in the hospitality business, and even more so in our what you might call our legacy business of construction materials. In every way, we find ways by which we can literally build up the nation, whether in terms of hard infrastructure, in terms of the people, or the lifestyle or communities that we are involved in. No? And I think what I'd like to say is for to our investors, we have now established a platform for growth, for a sustainable growth, and that is what we're excited about. No? And when we talk about these numbers, the possible numbers of capex that we will spend, they're fairly large. In fact, as I said, the dreams are even far bigger than the numbers that I can recite to you. But we will have to take this one step at a time. No? But we're there, and we hope to grow and continue to grow over the years. No? Thank you, Jeff. Thank you, Ian.
Thank you very much,
Thank you.
Sir.
Thank you. Thank you.
So it's
Thank you, Bianca.
yeah, thank you, Bianca and EJ. But my colleague Jeb keeps underwriting the financials, like how much undervalued FINMA is. But I guess on a personal note, my most favorite part about FINMA is the heart of the company. As you said, you mentioned your mission earlier is to do nation building, I believe, to build the nation. And when people think about FINMA, the first thing that comes to mind is construction. But what's easily forgotten is that you're also building the country in other ways through your education and providing homes for people. And that's really my most favorite part about FINMA, aside from the very, very low PE ratio. but but also I love the story of this company, of this conglomerate. So that's why we always enjoy having you here on our earnings call with AB Capital. And we hope to see you again for the fifth time. Tama ba? This is the fourth. So hopefully there will be a fifth
We'll stop
time.
counting.
And at some point
But
we will
next time
stop
we'll bring you
counting.
the big guys. Now we'll bring you Chito Salazar, Ed Sahagon,
Ah,
Bill Felix. These are the guys who run the business and make them grow. No?
yes, that would be so great, Sir Pete. So hopefully at some point we'll reach the fifth earnings call, the sixth earnings call, and at some point we're all gonna stop counting, and we will
We'll
continue to
count
be
something
part.
else like share price and whatnot. But
Yes, yes, we'll start counting how many percent we've gone up since the last earnings call.
yeah, but thank you. It's been a pleasure to have you once again and to hear your second quarter earnings. As you have said, the second quarter may not fully reflect the business and the performance, especially if you're education business. But from my perspective, there are really a lot of things to look forward to, especially during the second half. Of course, easing of course of the for your construction business and normalization for your education business, and most importantly, your property group, which got a funding of 420 million pesos, and of course Bianca's baby, which is the hospitality business, which is getting busier. In fact, I have a
Yes.
friend who just attended an event twice over the past 2 weeks. But yeah, thank you very much once again, Mr. Brion, Mr. EJ Kwak Hansen, and of course, Miss Bianca Del Rosario. Thank you very much for the time you spent with us this afternoon, and we will look forward to seeing you again in your next earnings call.
Thank you very much, Jeff.
Our
Thank you.
pleasure. Thank you. Thank you
Thank
for always
you.
having us. Thank you, Jeb. Thank you,
Of
Ian.
course, thank you. Have a good weekend.
You too.
So
All right.
before we go, I guess we have to invite our audience to the next earnings calls
Oh
that we
yeah.
will be hosting. So next Wednesday we will be having Bloomberry Resorts Corp with us, and next Friday we will be having Apex Mining.
That's right.
So it's up to you to guess who will be hosting. Is it me, Jeff, both of us at the same time again?
So Ian, I mean, since you mentioned that I always love to run my numbers, earlier I had that question as to the consolidation and the earnings. We didn't quite get it yet, but I think just like what we are seeing with a lot of other retail companies and perhaps some construction companies which got affected by higher costs recently, those costs have been coming down, especially over the past month. And also with the return to school, I think, especially given the increase in enrollees for FIDMA education, I am definitely looking forward to FINMA's third quarter performance. Because as I've said earlier, it's really earnings that we need in order for that stock price to resume that advance. But
Right.
yeah, we will have to just get back to our audience and our fellow investors once we get better indications of the numbers. But you know what, Ian? I guess uh, for them to also look forward to our initiation coverage on the company.
I
I
heard
don't know
it's coming.
if that yes, it is coming. It's got to be pretty soon. So please stay tuned for that, everybody. Um, I'm out of words. How about you?
I'm good. I've said everything.
Okay. So Ian, thank you very much for being my co-host this afternoon. It's been a pleasure to share the mic with you.
Thank you, Jeff. It's been great. I hope we can do this again.
Yeah. All right. With that, we thank everybody we thank our audience and our fellow investors who joined this call. Please join us once again for our earnings calls next week. Please be sure to sign up, check your emails, check our social media pages. And for those who missed this event, please check our YouTube page as well as our Facebook page for a replay of this event. Thank you very much once again. Hope you learned a lot from this session. And from me and Ian, signing off, and we are your investing partners. Have a good weekend, everybody.
Happy